Hey everyone, welcome back to Fiscal Voyage. In today's video, we're going to talk about a very popular stock, a monthly dividend paying stock, Realty Income. And this stock is a very favorite stock for dividend growth investors. They like this stock because it pays a monthly and growing dividend, and it's been paying a monthly and growing dividends for numerous years, almost over 20 years. You can see here from Fast Graph, most likely past 20 years. But first, we're going to start off with the Fast Graph and show you how tremendous and quality and consistent this company is. You can see here, even in 2008, 2009 financial crisis, the company, earnings only dropped 2%, which is pretty outstanding considering all the financial real estate crash and all that stuff that happened in 2008 and 2009. The stock only lost 2% in 2008 and 2% in 2009, but the stock price, the company did pretty well. It handled it pretty well, but the stock price, you can see here, it actually went pretty far down. It lost total return of 39%. So it's almost a 40% decrease in price. This is why valuation matters, and it matters a lot from Chuck, the owner of Fastgraph. And one of the things that I like about this portion of time period for Realty Income Corp is that it continued to pay the dividend. You can see here the dividend was at 151 in 07, and then 161 in 08, and 165 in 09. So not only everything was going crazy in 08, 09, it continued to pay a growing dividend and a monthly dividend during that time period. So if you picked up shares in this at that point, great job. But overall, the company's been growing earnings consistently. In the 20-year period, it's been growing earnings at about 5%. And in the past, well, let me say 7-8 years, it's been growing also slightly slower at 4.78%. But also another thing I want to point out is the company has been overvalued a lot of times. There's been very few opportunities to buy it in a fair value opportunity. So you can see here, like over here in 2014, over here in 2017, there were pretty good buying opportunity, but then most of the time it was kind of overvalued. And of course, COVID had a good opportunity here. You could buy as low as $45. And then now, look at this, what's going on here. We are having a great opportunity to buy more shares of this company and continue. And not only buying more shares, you can see the payout ratio has also decreased. You see from 2013 to 2019, the payout ratio was around 82%. You see here 82.5, 85.3, and 89.1. And right now the payout ratio is only 76%. So they could grow the dividend higher, and then not only higher, but it also gives us a margin of safety in the dividend payout ratio. So that gives us a safe dividend. And not only a safe dividend, the company has an S&P credit rating of A-, which is a good credit rating. It has low debt to cap ratio of only 40%. And you can see here AFFO yield over 7.5% with a dividend yield of 5.83, so almost 6% dividend yield. And you get paid monthly, which is outstanding. And you can see here the stock is undervalued based on Fastgraph. Normally the stock tends to have a normal price to AFFO of 18.5, but even if it were to revert back to a 15 price to AFFO, you get a 13.67% annual rate of return for the next few years. And if it were to revert back to that 18.5, oh, forget it. You're going to be looking at 22.37% annual rate of return. The only thing that could bring this stock lower is if the Fed actually increases rate, because they think inflation is still out of control and they need to increase it by another 25 basis point or 50 basis point. That could bring the stock back down. I don't think that'll happen. If anything, they'll probably just continue consistently for now, and possibly, hopefully, in the end of the year, start decreasing it by 25 basis point or whatnot, and that would drive the stock much higher. So we look at other things. For example, like I own shares of this company. I own 130 shares here at an average price of $50.20 or $50.20. So I'm up, $500, total return of 8%. I would like to buy more shares, but I would like it, around the low 50s. And one thing you could do is maybe sell some options, cash secure put. You can see here selling a $50 cash secure put will get you about $65 of cash while you wait. You can see here, you get $60, and it's going to cost you about $4,900 and 40 cents. Because of the $60 that they paid you, that gives you a nice cost basis of $50, so which is great. And I'll show you here in the chart. You can see here that $50 is great because you have a lot of support in over this area. So you could sell the $50 put over here, and you can see here it's under this support area around $51. So that $50 looks very nice. And you can see this weekly chart right here, this big green bar, that's strong buying power right there. That's strong buyers stepping up. So this is the low right here. This is the low. I highly doubt that this stock will come back down here and take that out. And if it does, if it does get back here around the $45, I'll be definitely buying more shares. I would like to get 3,000 shares, or not 3,000, but 300 shares of this stock around the $46, $47 range. But overall, you can see here that $50 put would be nice. But even now, like we saw in the fast graph, that $54 is a good buying opportunity. We go back to the fast graph right over here. That $54 is undervalued. It looks good. And if we look at Morningstar, you can see here Morningstar gives it a good buy rating. You can see here 5-star rating. It has a fair price of $76, and right now it's at $55.45. So we get a 5-star rating, high fair value price of $76, which is great. And you can see here most real estate company are still undervalued. Over here you can see here FRT is undervalued, KIM is undervalued, REG is undervalued. These are all competitors of Realty Income Corp. So these stocks, this sector is undervalued, and that's because of the interest rate. People are concerned, higher interest rates. So that could be the only problem that would bring the stock lower. But to me, it's just an opportunity to buy more shares if it does drop lower. Another thing I like to look at here is the fundamentals here. And we go to analyst rating. You can see here, Refinitiv Ratings gives it a buy with a price target or average target of $59.56. So it's about $5 higher. I like to look at this tip rankings, also moderate buy with a $58, so a 9% upside. And then the sentiment, you can see here prediction low is only $56, but overall is that's still higher than the current price. You can see here average price at $58. So that $60 looks like where people are expecting this company to be in the next 12 months. So that's that's very bullish. And considering if we look at the weekly chart, a lot of bottoming tail, that is a good indicator of buyers. And it actually broke out, came back down, and gave a nice bottoming tail with previous week green bar here. So that looks like it's going to take out this moving average, the weekly 50 moving average. You can see here how it responds to that right here, right here, right here, and right here. So now it's going to look like it's going to take over that. So it might do one of these and then come back to it and then go higher from there. But this is why I like this stock. Like I showed you, I do own shares. I own 130 shares. I would like to get this to 300, but I would like, close to the $50 range. If it doesn't come down, I'm okay with that. But it is undervalued for those who do not own shares of this company. It is undervalued. If we go to forecasting here, you can see here analysts expect continued growth of 3.5%. If they revert back to that 15 PE, you're looking at 13.67% in annual return. Getting paid monthly. Long-term growth, they're expected 2.5% growth rate. And this could grow higher if interest starts to come down. This growth rate could jump from 2.4 to 3.4 or 4%. But it could go lower if the Fed decides to increase interest. So those are my thoughts on Realty Income Corp. It is undervalued stock. I own shares. I'm up, about 8% or 7% or something like that. I would love to own more shares. I would like to see a little dip, around $52, $51 before I decide to buy more shares. But those of you who don't own shares, right now is a good opportunity to buy shares at $54. It is undervalued, and if you don't want to buy at $54, you could sell some cash secure put at $50. Pick up $65 while you wait for it to come down. If not, you have an extra $65 in your account there, and that only costs about $4,950 or so. So that's one way you guys could get part of this company. It sells cash secure put, or just buy it outright right now. A couple grand or whatever you can to start a position here, because it is undervalued, and and I own shares, and I'm looking to add more if it gives me a few dollars dip, a couple of red days, and I would buy more shares of this. But Realty Income Corp is undervalued, and thanks you guys for watching. If you're new to the channel, make sure you hit that subscribe button, and like this video as well if you found it informative, and I'll see you guys in the next one.